In today's trading world, we see that 99% of traders aren't necessarily profitable or aren't actually making any real money. And maybe they're making some good trades and hitting some TPs. But we see that after all, after maybe 1 month or 2 months of trading, they lose money and they don't make any profit. And maybe they're hitting 10 TPs in a row, but one stop loss or one liquidation breaks all the profit that they made previous to the stop loss. So that's why in the first video of my playlist, I want to cover these crucial topics of trading. And I think without them, you will definitely not be profitable no matter what strategy or setup you're using. And that's why I think 70% of trading is actually these three concepts, and the rest is technical analysis. So no matter your strategy, whether you are trading smart money or I don't know, price action, Elliott wave, momentum, whatever, it doesn't matter. If you're not following the risk and money management practices, you will not be profitable at all. So let's get into what is risk to reward and how can we be profitable utilizing risk to reward. So what is risk reward? We can see that we have in trading view, we have a tool in here. We can see we have two tools for a risk to reward. One is long position and one is short position. Long position means we are projecting that the price is going up. So we make a trade that we think the price is going up. So for example, maybe we thought that the price was going up at this point. So we put maybe this tool and maybe we put our stop loss under these resistances, supports, and we see that you can see that the risk to reward ratio is 2.17. And this means that if you have $10 and you are putting $10 onto the trade, onto the position, if your first TP hit, you will gain, it's 1%, you will gain $1 if it's leverage 1, and you will lose 50 cents. So that this is a risk to reward 2. So this means that in 10 trades, if you only win 33% of your trades, you're actually profitable, because if one of your TPs hits, you actually need 2 stops to remove your profits from the 2 TPs you hit previously. So that is risk to reward 2. But we should definitely aim for this risk to reward, because with fewer winning trades we can be profitable. But also there are some people using risk to reward one to one. In that case, you need to have 66% win rate. That means you need to be more precise at your trades, and you definitely need to know the charts pretty well, and that's a hard thing to do. And if your strategy or your setup gives you 1 to 5 risk to reward ratios, you can actually be profitable with only 15% win rate. That means if 50% of your trades become profitable, your account will become profitable as well. So that is risk to reward. But the thing about risk to reward is that you have to determine a stop loss, and without a stop loss, there is no risk to reward. And if your trade isn't what actually you thought of, you will lose all of your capital in your account. So what is a stop loss? A stop loss is somewhere that you think your trade isn't what you thought. Or in other words, we can say that Your stop loss is where you are proven wrong and you see that your strategy wasn't correct in the moment. And a stop loss actually make your losses pretty lower, and you cut your losses with the stop loss. And without a stop loss, you can use all of your capital. And using a stop loss is like having a plan in a war. And if you don't have any plans for a war, you definitely die in that war. So we see that we have two concepts now. We have risk to reward that determines how profitable you are, and without risk to reward, you won't be profitable at all. So the next concept is money management. We covered risk management and a stop loss. So money management is how much capital and money you're putting in each trade, and this means that if you hit your stop loss or hit your TP, how much money you will gain or lose. And usually, we all traders risk something between 0.25% and 1%. And this is for each trade. And our maximum risk tolerance for each day is 3%, meaning that in each day you can't actually risk more than 3% of your capital. And that means that if all of your positions hit a stop loss, you will only lose 3% of your total capital. And that is the daily mark, and the weekly mark is 9%, meaning that if in 1 week you lose 9% of your capital, maybe that's 12 trades, I don't know how much, maybe that's 12 trades hitting a stop loss, you will lose 9% of your money. When that happens, usually traders take a break from trading for 1 week or maybe 2 to 3 days, and that is to reset your mind, avoiding revenge trades, getting your revenge from market, and making emotional decisions, which are exactly what makes bad trades. So that is the case for risk management, and this is how much risk you will be tolerate for each trade. And if this stop loss hits, you know that how much money you lose. And for calculating how much money you should put in each position, there is a formula out there. If you don't want any indicators or any tools, you can use that to know how much money you are putting in a trade. But personally, I use indicators like this one, which you enter your capital and your entry point. For example, here our entry point, and this is an example trade, this is not a real trade, but for example, this is our entry 88k and our stop loss is on 88k flat, and we put that in there, and it says our position size, how much actual money we put in there, and the risk amount is the amount of money we lose if the trade goes to a stop loss. And here in the last part, we actually say how much leverage we are using. The higher the leverage, the less money you're putting in trade, and the less the leverage, the less the money you're putting in the trade. These three were the most important things in trading, and in the next videos we will cover the basics of trading and know how to actually find trades and maybe understand the charts. But I will say this all the time in the playlist in the future, and that without these three you will definitely lose money, and I know that because of my own experience. So doesn't matter how much you know the charts, doesn't matter how much you know the market, without managing your risk and managing your money, and without proper stop loss, you will definitely not become a successful trader. And we will cover more technical analysis in the coming videos. If you found this useful, definitely make sure to subscribe, and I will see you in the next video.